ground and it go off. Yeah, hit the ground and it go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah, yeah.
The morning show, Stock Market TV. Spencer, JC, Steve, Alfonso. On the show today, Andrew Thrasher from Thrasher Analytics will be on at 9. Mr. Ian Cully will be on at 9:30 to talk some FIC charts with us. So, good morning, chat. Good morning, Joe, Ravi, Curtis, Donovan, Mary, Mark, Blake, Mike, Investing Perspective, and more. Do me a quick favor. Hit that thumbs up for me, please. And my computer's being really slow today and laggy, so let's just bring JC and Steve on and then pretend my computer works, because I don't know. Where's my intro? See, my point exactly.
Hey now, ladies and gents, what's going on?
Hello.
Happy Monday. How did it feel yesterday with no football? You guys survive?
You guys watched the Pro Bowl?
Spencer has more money because he didn't lose on any football games yesterday.
No.
Made money on UConn. When did they switch the Pro Bowl to flag? Do you guys know?
I haven't watched the Pro Bowl in like 15 years, man. So
it's a no fun league.
Well, no, I was happy to see that they are no longer actually playing in like full pads.
By the way, I went to the Pro Bowl in 2008. Is that 2008? Is that when the Giants beat the Patriots?
No, 2007.
2007. So 2007, I'm in Hawaii, right? Going to the Aloha Bowl, rooting for the Giants because I'm a Dolphins fan and I didn't want the Patriots to go undefeated. So I was a huge Giants fan, right?
And it was the week in between, the week before the Super Bowl back then?
No. Back then it was the week after the Super Bowl.
Yeah.
So dig this. So the Patriots went like undefeated and then blew it in the Super Bowl. The Giants won. We all know. I was super happy. So then I went to the Pro Bowl. When they introduced the teams, the players on each team one by one. Then the second to last team was the Patriots. Literally the whole team was in the Pro Bowl. Like it was like 15 guys from the Patriots were in the Pro Bowl. Every single time they mentioned the player, the entire Aloha Bowl booed that particular Patriot. And there was one representative from the world champion New York Giants. It was Osi Umenyiora. Yep. And they introduced him. He walks out of the tunnel. The whole stadium erupts. The Aloha Bowl is going bananas, myself included. It was freaking awesome. It was so awesome. I'll never forget it. So it saddens me that that will never happen again because it's a bummer. But OC was dumb. He just stood there like this. He just stood there like this. Yeah. The whole stadium's going bananas, dude. It's so good. So good.
That was a special season. You know,
it was.
Yeah,
it was awesome.
Right.
The entire state of Hawaii was on the same page. Like, fuck the Patriots. The Giants won. Go OC. It was so good.
Speaking of the Giants,
that's my story.
all right.
The NFL has this thing now with the Manning brothers that's really cool. And they're really leaning into it. So they're like a part of everything. Like Eli.
People love them. People love them. Helps them make money. You know how it is. Why don't you hit it, Spencer?
Okay, then.
All right, nice little weekend. Futures been down all night with China really getting hit hard last night. Dow futures down 100 points. S&P futures down 15 handles. NASDAQ futures down 30 points, about 16 basis points. Bond futures down a full % on the 30-year as stocks and bonds continue to trade together. Silver down almost 2%. Gold down 1%. Copper down 1%. Oil flat. And the dollar absolutely ripping this morning. Putting further downside pressure on stocks with the volatility index now back above 14 and yields inching higher up back above 4.1% after your boy Powell was hanging out on 60 Minutes. Who knew that 60 Minutes still existed? And then in the old funny money, Bitcoin up almost full 1,000 points here, up 2% on the Bitcoin, right around 43,500. Over in Ethereum land, up again 2%, 23.30 on the Ethereum, and on the old Solana, we're looking at it up 3%, just under $100. Total crypto market cap, guys, hanging in there above 1.6 trillion. Very impressive, despite the dollar strength. That's probably what stands out the most to me this morning in futures. Face ripper in the dollar, and crypto up too. Wouldn't have expected that. Any thoughts?
Yeah, and futures more or less hanging in there. So this will be interesting because this will now be the second day in a row of dollar and yields ripping. Stocks did really well on Friday. Can they do really well again today? We'll see.
By really well, you mean half the S&P 500 was down, 2/3 of the New York Stock Exchange was down, 75% of the Russell 2000 was down. By really good day on Friday, is that what you mean?
Listen, just because you make a cute tactical bear call doesn't mean you could change the way we measure, right? Because last year, I think you would agree, it was a bull market all year. We had plenty of occasions where the major averages were up, right? Remember the thin leadership, the Mag 7 stuff, but most stocks were down. I didn't hear you saying this then, though.
We had a pretty severe correction after July, where we saw a lot of that sort of thing. July, August, September, into early October, stocks corrected.
No, days when the averages were up, but most stocks were down. Happened a lot.
Did it? All right. Well, we'll go back and you can count. You can show me some examples when we're done with the show. You can show me some examples of how the market did so good. But 60% of the New York Stock Exchange was down on Friday.
You can get an AD line, do a one-day rate of change on the AD line, and the SPY itself.
One-day date of change on the AD line. Oh, my brain hurts just thinking about that. That's gross.
Well, doesn't that measure what you're talking about? If the AD line is up that day,
I don't care so much about the AD line on a given day. I don't know why you think I would. Why don't you show slide 9 there so you can see the correction? By the way, this market correction turns 2 months old next week.
Was the 60 minutes good? What do you have against 60 minutes? I'm looking forward to watching it.
It was just a joke. It's just a joke.
Oh,
I remember 60 minutes because they used to put the commercials on during football, like during the NFL, right?
They still do.
They still do. See, there you go. They still do.
I watched it, Steve. I watched it this morning. Not
you know what's interesting? I don't really get those commercials. Maybe because I used the YouTube TV.
That's exactly why.
That's why I use the YouTube TV. I don't use the CBS.
Yeah.
Me too.
All right. So here's what we're looking at is, people are like, oh, JC, the stock market keeps going up. It's like, is it though? So, there's a lot of ways to measure, how the markets have been correcting for the last, 7.5 weeks or so. This is just one of the many. We can go over a few, but here we're looking at the percentage of stocks above the 50-day, percentage of stocks above the 200-day. And there's no magic behind these numbers, right? It could be the 63-day. It could be the 197-day moving average. That's not really the point. The point here is like, if you're above the 50-day moving average, you're probably in a short-term uptrend. If you're above the 200-day moving average, you're probably in a longer-term uptrend, right? That's pretty much it. You can play around with those numbers, but you're going to get the same data. What you're seeing is the percentage of stocks in the S&P 500. I mean, you can look at the New York Stock Exchange too. You're going to get the same thing. With the indexes making new highs, fewer and fewer stocks are in short-term uptrends. Fewer and fewer stocks are in longer-term uptrends. That's just classic, classic breadth deterioration before a correction. We've seen it a million times.
But the majority of stocks, it appears, are still in long-term and intermediate-term uptrends.
Nobody's saying that they're not. All I'm saying is that you're seeing fewer and fewer. I'm less interested in the absolute number, which you are right. I agree with you. It's the fact it's the fact that absolute number continues to get shorter. The list of stocks making new highs keeps getting shorter. You notice how quickly this weekend we were able to count how many stocks are making new highs. It didn't take very long because the list is so much shorter than it used to be. So you do it real quick. It doesn't take you very long at all. What took a lot longer for me this weekend was counting all of the divergences. The breadth deterioration, the momentum divergences, all of the intermarket divergences. That actually took me a lot longer than it has before. So interesting. But I had plenty of time because it didn't take me very long to count the new highs list. Didn't take me very long at all.
It looks like it might take a while just out here this morning. 40.
Might take a while to do what?
Pre-market in the S&P.
40 stocks are making new highs?
Pre-market.
Are you really looking
It's
at the
already
are
at
you really
40.
looking at the new highs list pre-market? That's
I always
that's
do.
some degen.
Yeah,
That's some degen shit right there.
I don't know. I think it's a tape reading thing. It tells you a little bit about the animal spirits.
Yeah, let them dance. Let them dance.
Especially during earnings
Let
season.
them dance.
I think your problem with this is it's all the same names. You're sick of seeing the same names on the new highs list. You want to see new names.
I
like
don't
if
I
that was your
don't
criticism.
necessarily care or want anything. It doesn't matter to me at all. What do you mean?
Right. You're right. Got it. No, I forgot who I was talking to. But
Why would I give a shit?
okay.
Why? I don't understand. I will want to see this. Why would I want to see that? I don't care. I don't trade the market that I want to be in, right? Because if I did, I would want a 50% crash in the market, right? Because that's what would be the best thing for me and my family, a 50% crash in the market. But that's not what's happening. So I have to trade the market that we're in. I live in reality. I don't live in this fantasy land where we can get a 50% haircut on all assets and JC comes in, swooping in, buying everything. Yeah, I would love to do that, but that's just not the market we're in, Strazza. So I don't really worry about what I want to happen.
Where are we wrong on this tactical view, though? XLP SPY falls back, say today or this week, back below that 0.15, right? 0.149 level. Is that it? Like where?
Like what would be a bullish development for this market?
Yeah, like where's your line?
Yeah, I want to see more stocks going up, not fewer.
Okay.
More stocks going up, not fewer. That would be step one. Step
in
two.
What? In NYSE, S&P 500, because they were mixed last week.
Probably both. I mean, people ask me all the time, JC, like, what universe do you use?
Yeah.
The answer is we use all the universes, right? As is usually our answer. If we don't have an answer, we just do them all, right? I think the New York Stock Exchange consistently is probably the one with the most information because you're getting a lot of international exposure, right? Over half the top 100 companies on the New York are not even in America. It's a good, what is it, like 2,300 stocks? It's a good list. Would you agree?
Big one.
I know you're in the mood to disagree with everything I say this morning.
No, nice.
That one I probably agree with, right?
I'm not. Listen, it's fun to disagree, especially when we really disagree, like I think we do right now.
But do you agree that the New York is probably the best universe?
New York common only.
New York common stock only. That's right.
Common only.
You would agree?
A lot of people make that mistake, and that's not the best. That's one of the worst universes. The full night.
Yeah,
right?
I hear like even smart people, friends of ours, like they'll include all those closed-end funds and the types of stuff that are in New York because they want to look at what's happening on the exchange in general. I get that. But if we're looking for stock market breadth, I think we should look at stock market breadth, not stock market breadth plus closed-end funds plus, you know what I mean?
Yeah, absolutely. I think that's the wrong way to do it. And I think most people who do that might explain it away, but they got to get their data up, I think.
Yeah, I mean, again, I get the logic of I just want to see what's happening on the floor of the exchange. Like, I get that. So they include everything. I don't necessarily have a problem with that. But what we're doing here is specifically looking at stock market breadth. So we just look at stocks, right? I don't think there's anything wrong with those people doing it that way for their purposes. But for our purposes specifically, here, stock market breadth analysis, we want to look at common stocks only.
We could overthink it, right? Because most of those funds are actually bond funds, I think.
It's all kinds of shit. That's not the point. They're not stocks.
But when stocks and bonds are moving together, it might be okay. It might, you know what I mean? It wouldn't cloud the picture too much. When stocks and bonds are moving in opposite directions, though, that thing's going to give you a weird read.
So to your point, in this market, I haven't looked at the whole New York Stock Exchange because I wasn't interested in that data. But to your point, with stocks and bonds moving together, you're probably going to get the same data there, right? As bonds have been deteriorating with stocks. Why don't you show the advanced decline lines? And Strazza loves the advanced decline line so much. Slide 10, Spencer. So, again, there's nothing super fancy about the advanced decline line. It's one data point. It's just one of many, many divergences we're seeing out there. It's really just another way to see the same thing that we're seeing all over the place. It's just one way to look at it. A specific set of glasses as opposed to the other set of glasses, right? But it's telling you the same story, right? You know when this peaked actually, Strazza? This peaked when the Russell 2000 peaked at the end of December. So that's probably not a coincidence. Right?
Oh, not the middle of December.
No,
The end.
and when the small caps peaked. Also, it's when the dollar bottom. Remember, the dollar didn't bottom until the end of December also. So the breadth deterioration started when the dollar index bottomed.
Is this that uncommon? This kind of a divergence? Do you see this a lot in bull markets?
You see it a lot right before rug pulls.
Do you see it a lot right before the AD line catches up?
Let me tell you something, Strazza. I spent a lot of time.
I'm just asking good questions over here.
And I have.
Don't get mad at me.
Nobody's mad at you, bro. Relax, son.
Tell me.
I've spent a lot of time studying bag holders, right? So these are the people that are left. These are the people that are left holding the bags, right? Bag holders absolutely love to buy stocks when they're seeing breadth deterioration just like this. You know, and where I grew up, the idea here, the goal is to not be a bag holder, right? Is to not be the one left holding the bag during the rug pull, right? So if I know that I don't want to be a bag holder, you go back, you study bag holders, right? Study their behavior patterns, study the things that these folks do, so you don't make those mistakes, right? You're welcome to make those mistakes if you like. Me personally, I've witnessed them buying stocks when you see these breadth deteriorations very consistently. So it's just not something that I want to do because my goal is to not be a bag holder. That's just me, though. That's just me.
So there's a thing I think we say around here: not every AD line divergence calls a market top, but every market top comes with an AD line divergence.
I forget who said that, but that's sure.
Yeah. It's kind of like the yield curve to me.
No.
You know, it calls more recessions than actually happen. This is like a momentum divergence. Let them dance.
Well, it's not a momentum. It's not a momentum divergence. The momentum divergence would be slide 8, Spencer, if you want to throw slide 8 there.
I get it. I'm saying it could act in that way, right? Where like in a bull
market. It's not a momentum divergence. It's a breadth divergence. It has nothing to do with momentum.
Fully aware.
By the way, 6,000-point rally. You had a 20% rally in 3 months. 20% rally in 3 months. Some people say 20% is a bull market. Can you believe that? We got in 3 months, by the way, in what is historically the best 3-month period of the year, November, December, January, the Dow rallied 6,000 points, right? Again, perfectly normal during the best time of the year. We were bullish. We were buying stocks. No complaints here. And now as we enter what is one of the worst months of the entire year, you're seeing that this is the momentum divergence. You were looking at a 14-day RSI, right? 14-day RSI. You love the RSI, right? Isn't this something you talk about all the time?
I use it. Sure. This is my main momentum indicator. So, for me, though, in bull markets, I just want to see overbought readings.
So let me tell you something. Let me tell you something about these bag holders, right? I've studied them for many years. I don't know if you heard. One of the things they also love to do is they love buying stocks when you have these momentum divergences, particularly after a monster move higher, right? I think they call it chasing, I believe.
Buying stocks when momentum is diverging in a bullish momentum regime, nothing wrong with that. That tends to be the right move most of the time.
All right, so you go do it.
Listen, it's all fine. My point is, none of this screams at me, you have to turn bearish.
Why don't you throw slide 4? Why don't you throw slide 4 up there, Spencer Israel?
Pretty ordinary garden variety stuff.
Oh, if I ever say the word garden variety, just fucking smack me in the face.
This is your best data point. This is your best argument. This one, yeah, you're right.
Well, you see, so I'm not trying to add data points. For me, it's a weight of the evidence. We take a holistic approach to markets here at All Star Charts. I don't know if you heard.
This is your best piece of evidence. What are you talking about?
All right. What's so good about this chart that the other ones make you feel insecure?
Because we both know buying stocks when momentum is diverging or breadth is diverging a little bit in a bull market, it tends to be just fine most of the time. Buying stocks when the dollar's making fresh multi-month highs, printing massive, engulfing candles like that, getting follow through today, don't look now, but rates have been ripping also the past 2 days. And when rates were rolling earlier last week, stocks were not catching a bid. This, to me, this is cause for a little bit of caution.
Let me ask you something, Mr. Strazza there.
Yeah.
Do you trust the bond market and the Forex markets, or do you trust what the S&P 500 is doing?
I trust the thrust. All of them.
Whoa, I like that. Trust the thrust. That's a t-shirt.
That's what I trust.
Write it down. Write it down, Fonz. Trust the thrust. I like that.
Right. And we see after these.
Did you do that on purpose? Or did that just happen? You're not that clever. That happened by accident.
You just set me up. You gave me an alley-oop. We get these momentum thrusts, right? These extreme bullish readings. And then you typically do have a period of cooling or a period of corrective action. And the way that I'm looking at it is a lot of these thrusts came in mid-December, and we've really had corrective action for 4, 5, 6 weeks now in most areas.
7.5.
Right?
But who's counting?
Yeah, right. Sure. So, to me, it was leg higher, Q4, standard corrective action. Why wouldn't the next kind of directional wave be another leg higher? That's where my head remains.
In equities?
But this chart here could throw a wrench in that.
The dollar's laying the smacketh down on your bull thesis. You know what I'm saying?
If the dollar's going to rally back up to the 106 range, then yeah, stocks are probably correcting more.
I can see the dollar and the bond market cheersing at a bar, laughing at people's fundamentals. You know what I mean? Ha ha ha, right? You know what I mean? Somewhere in heaven, the dollar and the bond market are having a drink, and they're just looking down, laughing at people studying their balance sheets and shit. You know what I mean?
I mean, intermarket analysis
with their peg ratios or whatever.
Seasonality has been really good. You've been all over it. It's been, fucking perfect. But the intermarket information that we've been getting for the past few years now has also just been excellent.
It's been more. It's been more than a few years, buddy. You're just starting to pay attention. It's been going on forever.
Right.
No?
It's been really strong since the COVID lows. Really strong.
What do you mean been strong? What has been strong? Intermarket relationships?
Yes.
No, bro. This goes on back forever, man.
We've seen periods of dollar up and stocks up.
Yeah, fine.
Nothing like that.
Because correlations change. But these intermarket relationships
are really good.
The thing is that this is where people forget, and you guys make fun of me because I say this a lot. We're not Americans. We're Earthlings, right? We live on planet Earth. So when money is leaving one asset, it's going to another. It doesn't just poof and disappear. So if you take a step back and you zoom out, you could see that flow. It just so happens that in the current market environment, the negative correlation between the dollar and equities has been very strong, which I think is your point. And you're right. And it was before COVID. It was before the Trump election. This goes back, the strong negative correlation between the dollar and equities, that goes back to 16. Yeah. Remember the mighty dollar? The Economist magazine? That was kind of the beginning of that really strong correlation. These yahoos put up, Muscle Man, George Washington on the cover of the Economist magazine, and that was literally the top of the dollar. And the correlation has been, since probably maybe the third quarter of 16 is probably when things really got going. You guys can check my math, but something like that.
Yeah, fine. So the dollar, I look at something like this, action, the dollar and rates today, and then I look at Bitcoin trying to print some wide range engulfing bar here. And I know it is 8:56 in the morning. I don't think we will look back at both of these charts come 4 or 5 o'clock, maybe even tonight for Bitcoin, and see that they're both ripping higher and making new, multi-week or multi-month highs, right? Well, one of them is going to be wrong here.
Can we get Spencer, get Chris Kane on the show? I was on the phone with him on Friday. Fucking love Chris Kane, dude. He's the man. And we were arguing about the correlation between stocks and Bitcoin. And, he's one of these math guys, coder types, I'm not. I'm more of I'm not one of those. And he was really fighting, arguing with me to the point where I was like, I'm not having this conversation about Bitcoin and stocks and how they're not positively correlated.
Oh, they're very correlated.
That's what I think. That's what I said. And he's like, well, causation and da-da-da. You know how these math guys are.
Too much. They do too much sometimes.
Yeah, that was kind of what the impression that I walked away from. But I really like Chris Kane, and so like it's not like I don't respect his opinion. In fact, I do a lot actually. So that's why I'm even bringing it up, right? Because if it was some like
He's great.
if it was some like anonymous troll on Twitter, like I'm not gonna really care. But like this is Chris Kane, so like if he says that it's one way, then I know for a fact he's put in a lot of work. So let's have him on the conversation. Let's have him in the show. The fact that he hasn't been on the show, Spencer, like, what are you doing, bro? Chris Kane.
We lost Spencer.
Chris Kane's a homie.
I'm here. I've emailed him a couple of times. So we haven't like synced up. I've emailed him a few times. So
all right, get him on. I spoke to him on Friday. He's doing great.
JC, tell him to answer Spencer's emails.
Dude, he works with what's her face at Bloomberg. She used to be at Wells
Gina
Fargo.
Martin Adams.
Gina Martin
She's
Adams.
fantastic.
So he works with Gina Martin Adams, and like Chris just gets to play with all the Bloomberg toys, like all the new toys. Like he's like the one who gets to play with them. He's like the toy tester, but like for like crazy math nerds,
It's fun.
He loves
new
it.
toys.
He thinks it's great. He loves it. It's funny.
Oh wait, I take that. Yeah, I emailed Chris. Last time we emailed was December. I'll reach back out.
Speaking of new toys, just hearing more and more about these Vision Pros, guys.
I'm getting one. I'm getting one.
They're all over. They're all over. They're all over social
I
media.
decided. I already spoke to some developers about building us a chart metaverse.
That would be, dude. That'd be so cool.
I know.
I just sit on the couch.
I know.
And you just build your own charts.
I know.
Like, oh,
and you go around the world with JC, and you drink wine in different countries, and look at like Italian stocks, and drink a Barolo, and like I already have it all mapped out.
And also, I just want to say one thing, because so much about this out there on the interweb and the mainstream media and the newspapers. The argument about how sad and depressing these technological advancements are and how lonely they're going to make us is so tired and lazy.
It is. So
no
stupid.
shit. No kidding. We've known this for 50 years since we started making these technological advances, right? So to like sit there and be like, oh, this is sad and lonely and my poor children, that sucks and I get it and it's always going to be a problem. But to try and halt the advances of technology because of that, I totally missing it. So like, I get it, but I'm so tired of hearing that.
$3,500 though. $3,500. It's not like when I bought the Facebook one, it was only 500. This $3,500. That's not nothing. You know how many ribeyes? You know how many ribeyes I can get?
That's a lot of ribeyes.
That's like
you
two,
can get
that's
a whole
like two
cow.
omakasas.
That's a cow.
We bought half a cow. We bought half a cow a couple of years ago.
1,500? How much?
It wasn't worth it.
15?
It wasn't worth buying half a cow.
Well, it's a pain in the ass.
It's not.
You need like a butcher in your family.
No, they butcher it for you, dude. You
Yeah,
don't
like,
literally buy half a cow. They butcher it for you.
Yeah, but like where are you going to store it? It's too much
in a freezer. But the problem is that you're getting a lot of cuts that you don't really want. Like I eat ribeyes, so like I don't want the fillet. I don't. I like flavor. Like my wife, she's no longer a fillet gal. She's a strip gal now, right? So like I've already transitioned her. She'll be eating ribeyes before you know it. You know what I'm saying? So like, why am I getting all this stuff that I'm not going to eat? Like, by the way, I got like 6 pounds of oxtails that I'm going to hook up for a Super Bowl.
Did you see the record-winning tuna that was sold a few weeks ago?
That record gets broken every once a year. So
yeah, it's inflation.
Yeah.
But I mean, dude, the prices that they pay for these giant tunas.
Yeah.
I'm like, who's even doing that? Where are they? Who's filleting it? Where does it go? Like
it goes all over the place, dude. It goes all over the world.
Big fish.
It goes all over the world.
Crazy.
What
very cool.
So who's our guest today, Spencer?
Mr. Thrasher.
Oh,
Really?
I should have mentioned. Sorry. You know what? I forgot to mention this off the top. I think I said he's coming out at 9. He's coming out at 9:15. My mistake.
Oh,
so
beautiful.
We have
Strazza,
we have a few minutes.
Are there any
he's buying all these new highs pre-market.
Any other charts that you want to point out, or should we do a little scoop?
It's really not much going on there.
Nothing happened.
I would rather do news. Same old Berkshire, Liberty buys, and another Intel CEO purchase.
Yeah.
Well,
we got some earnings,
is it another Piker purchase, $100,000 or something like that?
Intel, interesting in the news last week, they could stand to benefit from the uncertainty around Taiwan Semi, right? Because Taiwan Semi, ASML, they're like these powerhouses that help power and supply the broader chip making industry, both equipment wise and chips, actual chips themselves, right? So these other semiconductor companies need them. They rely on them, but there's these like geopolitical issues. So I think Intel could get some of that business like from these other semiconductor companies, because the more and more this stuff gets weirder and weirder over in China with the China-Taiwan stuff, that's just too big of a risk. They got to bring some of that manufacturing back home. And I think Intel wins from that. And maybe the stock already priced it in. I don't think that's rocket science to think that. They've had a nice run, but there was a headline about it last week. Make sense? Nobody? Am I thinking too hard?
No,
I don't know.
It makes you happy, bro. It makes me
I
happy.
don't know. I don't know anything fundamental about these chip companies. I know nothing. So
as much of a back of the napkin fundamentalist as I am, doing all right.
Yeah.
You know,
listen, it sounds smart. You could be totally making it all up for all I know, but it sounds good.
The fundamental thoughts I have are like highest level, so simple. Like, think about like the Coinbase stuff from a year and a half ago.
Yeah.
They're the industry leader. The PE is 5. You know what I mean? Like, it doesn't have to be some grand, you know.
I prefer there to be no. I prefer there to be no E at all.
Well, for Coinbase, some years there's a big negative E. So,
but if you have a negative as the denominator, then there's no answer.
PE.
Then there is no PE.
You can't divide. You can't divide by a negative number. I mean, I'm no math major, but isn't that like a thing? Any math majors out there in the chat?
This is JC. You're correct.
I'm correct, right?
Yes.
I remember this like somewhere. There's in my brain from like 3rd grade.
Yes.
See, I used to get. I may have gotten a C in English, but I was getting straight A's in math.
There we go.
Until we got to like the advanced calculus, then it was all downhill from there.
All right, let's do some earnings here, and then at 9:15 we'll have Thrasher.
Rachel says you can divide by a negative number. You just can't divide by 0. Is that right?
Hey, guys, can we do one of those Super Bowl pools with the boxes for our company?
Don't you have enough bars in Key West?
Yeah, but wouldn't it be fun to do one internally? That'd be cool.
Yeah, that would be fun. All right, let's do that. I'll give it to you. I don't like to I don't like to like, you know, promote this gambling nonsense.
Oh, come on, picking some boxes. Everybody does it.
We're professionals, you know. We look for favorable risk versus reward. Buying boxes for the Super Bowl just ain't one of them. But I like your idea. We'll do it.
Team building exercise.
I'm a building exercise.
It's JC. It's a gambling holiday, right? With favorable risk versus reward doesn't exist.
If anybody bets on the coin toss, you're fired. I'm saying it right now. I will not stand for that.
No, that's not for me.
I actually did see a bet that I want to put on.
What, the prop? Tell me. I'm interested.
It's not a prop. It's not a prop. It's Sam Darnold for MVP.
Isn't that a prop?
It was plus. I may arguably maybe it's plus 3,000. So Brock Purdy gets hurt. Darnold comes in. There was a couple touchdowns.
Plus 3,000. So you put up $100. Those 30 to 1.
Yeah,
that's still not that good.
I don't know. I think it's pretty
MVP
good. Anyway,
guy
moving on.
Who most likely won't even play.
Not even gonna play.
And you're only getting 30 to 1. That's not good.
All right, let's do some earnings here.
Yeah, fine.
What? All right.
I'll sprinkle. Yeah, go ahead.
All right. Where should we start? Maybe let's start with Estee. Let's start with Estee Lauder. Stock is up very nicely this morning. What, 16%? Give or take? Yeah, 16%. Big EPS beat, big sales beat, laying off between 3 and 5% of their global staff. They have like 60,000 employees. I did not realize they had that many employees. So some layoffs there. They narrowed their sales guidance, but they raised the like low end, or no, it was a tax adjustment. But the guidance was good. Earnings were great, by the way. So that's why the stock is up. But yeah, all in all, nice report. And they're for them, it's the same thing as tech, where they spent like all of last year trying to like, rein in their spending and become more efficient, become more profitable, and that's kind of what it looks like they're doing now. So anyway, good report. Good morning here for EL.
Yeah.
Okay. All right. Let's move on. McDonald's came in below estimates here this morning, and they are blaming the war in the Middle East for that. So McDonald's is down. I think it was a sales miss or an EPS miss or both. I don't even remember at this point, but you don't see McDonald's miss too often on their report. So what is the stock down now? I don't think it's down to last I checked it was down like 3%. So it wasn't like a lot, but something. So okay, we have that chart. I want to talk about Caterpillar, which had a tremendous year-over-year increase in earnings and in revenue. Operating profit up 87% year-over-year, mostly due to higher prices, which kind of counteract a slight drop in demand. So look at that cat chart. Whew. Nice.
That thing has been such a beast. That was one of our biggest winners last year, man.
Yep. We had Tyson Foods, kind of the same story where rising prices are counteracting a not quite a fall in demand, but a fall in supply. Apparently, I didn't realize this. I was reading it this morning. I guess there, according to the Department of Agriculture, there were only 87.2 million cattle in the U.S. at the start of this year, which is down 2% from a year ago, and the lowest number since 1951. So cow shortage apparently, but Tyson's all in on the chicken and pork as well, so that balanced that out. But yeah, not a lot of beef. I had no idea. We apparently have not quite a beef shortage, but a falling supply of beef in this country.
What happened?
And then on
Perlman ate all the cows.
I don't know. Someone's. I mean, I eat a shit ton of beef, so maybe I'm.
And what's the story? So all of these like cow farts are like ruining the environment or something like that.
That was like I mean,
cow farts.
That was a thing.
Yeah,
I mean, it was a thing.
Cow farts.
It was a thing for a while. It was like a theory. I mean, maybe I'm sure it's true, but it was over exaggerated. That cow farts were increasing the amount of methane in the air. That was
that wasn't true.
Well, I'm sure it's true, but I think it was like one of those things that was vastly overhyped,
because it's like the yeast farts, right? We pay extra for that, because the yeast they fart in the bottles of champagne, so that's when you pop it, all the farts are getting released into the air.
Oh, I had no idea.
Pay extra for that. That's why when people open a champagne and they go pop. Like they're letting all those yeast farts out that you're paying extra for. So when you open a bottle of champagne, you want it to sound like the sound of a woman's sigh. Like,
yeah, right.
Not pop, right? It's like,
I didn't know.
So they're like,
basically
like carbon emissions. You might as well just set up a futures market, cow fart futures, CFF_F.
You can't bottle the futures.
You
can't like bottle a cow fart.
You can't save it in a jar. Some of these girls on Instagram, they fart in jars and sell them now. Why can't
I know. It's a racket.
What are we talking about now? Come on. All right. Last one.
OnlyFans.
Last one. On. Do we have the on chart? I think we do. It was a beat and a beat. Same story. This is like the last major semi to report. I feel like
as it turns out, it's good being a semiconductor these days.
Yeah, no kidding.
So this is not on.
No.
Oh, on semi. I'm sorry, on semi. That's what I meant to say.
On semi. On is a shoe company in Switzerland.
Right.
Instagram wants me to buy them so bad just because we talk about them on here so much. These sneakers are everywhere on my apps.
Brett Conrad was rocking them at the in New York a couple of weeks ago.
He is such a fashion forward guy. I just love it. So good. And that stock he was talking about, the Wilson stock, it came public late last week. Probably we should talk about it tomorrow, maybe.
Cool.
That's it for the earnings for that I had on my list to talk about today. We have Palantir. We have NXPI tonight as well.
That's a big one. That's a big one.
Yeah, that's a big one. We're looking out this week. Eli Lilly, Spotify, Snap, a couple automakers, Toyota and Ford are both tomorrow. Uber is Wednesday, Alibaba, PayPal. Oh, Disney. I should pay attention to that.
Why?
Because I own that stock, and that's actually one of the most interesting earnings reports for me. I find their business to be endlessly interesting. Just the media conglomerate that it is.
Yes. Absolutely.
So what else do we have? We have Pinterest on Thursday. We have Affirm. We got some staples this week. Hershey, Pepsi on Friday. So we got some names.
These staples stocks, man, have they been just clobbered? But if you look at something like Hershey right now, JC's going to love this because this supports, I think, higher prices for staples relative. But look at the base in Hershey's that's been forming, since the October lows.
Yeah, but how big is Hershey's, dude? This thing's a nothing burger.
No, it's big for a staple. It's $40 billion.
What? Thank you,
$40
Steve.
billion,
Yeah.
Bro. It's not even in the top 10. Don't come at me.
One of the largest staples. It's one of the largest staples.
It's not one of the largest staples.
Yeah, it is.
No, it's not.
It's gotta be.
It's the 18th largest.
Oh, wow. One of the largest. How many staples are there in the large caps? Like 20?
What's the largest?
Sounds like
what's
it's
the
one
largest
of the smallest
staple?
ones.
Walmart,
Largest,
Costco, Coke,
Walmart,
Pepsi, cigarettes, and then it hits all the sugar.
The confectionery companies, right?
Yeah, so Keurig's actually, you're right. I mean, Keurig's bigger than them.
Dude, there's 37 consumer staples in the S&P 500. This is number what? Number 18?
40 billion is not small, is the point.
So you would consider that one of the biggest? Sounds by my math as one of the smallest.
No, it's one in the middle list. What are you talking about?
It's more an example of what you're seeing in some of these charts. You got some basey stuff going on. You could say the same thing about Target. Ooh, look at the Colgate Palm Olive, the CL.
Yeah, CL. Yep.
Ooh, get some. Cigarette companies still look terrible. Mondelez always looks great.
So yeah, the 18th largest. Strazza's right. It's technically a confectioner.
You don't need to fact check me. I got the internals on lock.
Can I bring on Andrew Thrasher?
I like facts. What do you
That's all you're getting here from me.
Facts only.
No spin.
No, facts only. Bring in Mr. Thrasher. I'm glad he's here. Somebody bringing some common sense to. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Andrew Thrasher.
What's going on? It's been a minute.
How about those Purdue Boilermakers this weekend, huh? Big
Dude, we're having a good season. How many other teams have been able to beat this many top 10 teams? We'd be like 1-8. We'd beat almost every single one.
And then Strazza is going to be very sad to hear that these Purdue Boilermakers have a better women's basketball team too. How about that? These Connecticut folks, they love their women's basketball.
Yeah. They've always had a killer team. He should be
not as good as those Boilermakers. Are they called the Lady Boilermakers?
Sure. I don't know.
Oh, I don't know.
They're really good. What's the tall guy's name? He's huge. Edie. What a monster. And he's like a freshman too?
No, he's a junior.
Oh, he is? Okay.
Andrew, I watched that game yesterday. They look real good, man.
They do.
Yeah, they were good last year, but no one that really watched enough last year thought they were going to go real far in the tournament. So I wasn't shocked. I mean, didn't think they'd lose to a 16 seed, but this year they definitely top, I think, Final Four easy.
From a seasonal perspective, they need to play well in March. Is by my math. Is that
how it goes?
That's how it goes. That's how it works.
I'm a bit offended because the futures, if you look at NCAA futures, back to the betting stuff, Purdue still. Oh no, now it's tied. But up until this morning, Purdue was the favorite to win it all over.
As they should be.
Mr. Thrasher, talk to me about this volatility spike we're about to see in February.
I think there's a good chance we could see a volatility. Volatility bottomed in December. Volatility did better than equities did in January, and everyone was losing their minds over equities in January. Volatility bottomed in early December.
Facts only.
Yeah.
Spencer, can you throw up slide 6? I want to hear what Mr. Thrasher thinks about this one.
People talk about a Santa rally in equities. Santa brought volatility. I knew
right.
you guys were talking about Mexican. Every time I come on, you guys bring up this Mexico peso.
Well, it's more of an extension of the dollar being risk off that you get with a volatility spike, but change the denominator to many other things, you're going to get similar data. The Mexicans just more.
You can put up just about anything, everything that from a risk standpoint bottomed or topped mid-December.
That's right.
I know you've been talking about a lot too. Breadth peaked. You looked at some of the momentum stuff. I mean, just everything kind of December, everything kind of turned around. It just really been, as much as you hate it's only being led by a few stocks. It's true. It's math, but that's been the case this year.
What do I hate?
But are we using the right?
I don't hate anything. What do I hate?
You're always like, it's the 7 stocks. It's only 7 stocks. It is only been 7 stocks.
Well, maybe last month.
Yeah, that's what I mean.
Yeah. But in this case, that's actually true. Last year it was not. It was bullshit.
there's periods, but yeah, right now it's Nvidia's made up 25% of the gain. Accounted for 25% of the gain so far this year.
And also Meta on Friday was up 20% with most
crazy.
of the New York Stock Exchange down, most of the S&P 500 down. So, Meta up 20%, really masking the weakness you saw underneath the surface, which makes sense with the dollar ripping on Friday and bonds getting the shit kicked out of them, right? So stocks should fall, and they did. You just don't see it at the index level, right?
Talk about the Mag 7. Really this year, it's been 4. It's been Nvidia, Meta, Microsoft, Amazon. 70% of the gain, those 4 stocks alone. Not even Apple. We're not even talking about Apple anymore. Actually, the next strongest stock is actually healthcare, Lilly.
Yeah. Yep. So you think we get a volatility spike in February? Is it because when volatility spikes come, they often happen in February, or are you seeing some other stuff underneath the surface?
So I think you have a couple different things. We've seen, like I always talk about, compression and volatility. Standard deviation compressed at the end of last year. His seasonality wise, when you look at it from a seasonal standpoint, February has been a pretty positive month for VIX, and it's a little bit more of a struggle bus for equities. You're also starting to see just a little bit of, I think from a sentiment standpoint, you're seeing skew spike higher. The reason I think you're seeing volatility inch up right now has been more on the fact that we're seeing a lot of calls being bought on S&P than you are the fact that volatility is actually rising. And then just from a sentiment standpoint, when you look at the COT data for the VIX, the only people that are long VIX contracts right now are commercials, which essentially just means everyone else is trying to short them. When you look at open interest, this is what I wrote about the past couple of weeks in my Thresh Analytics letter. Open interest accounts for like 80% of open interest is owned by commercial traders, meaning no one wants to own any protection right now. Everyone's on the bandwagon for equities, and maybe that can continue, but that's the kind of thing that sets up for when you do have a volatility event or something catches fire, everyone is caught with their pants down, and we see these spikes. That's kind of what happened in 2018. Everyone got this huge melt up. You had a quick pullback, and then we continue to go higher. But I think we could see some volatility in February, sure.
So last week,
and apparently, I'm hearing also with that VIX positioning, NASDAQ 100 commercials largest net short since 2017.
I think it's tough. When I look at, I think it's tough to get a good read on index COT stuff, just because it's not always directional.
And there's so many other ways to be in the equities market that in the futures you're not getting that pure info like you would in a cocoa futures market, for example, where there's no other way to get in the market. Like you're getting all the data, right?
Yeah,
but,
I think VIX is separate. People only buying VIX essentially to hedge. Whereas I think someone's playing NASDAQ or equity or S&P futures, it could be directional, it could be hedging. So I think that gets a little bit muddy.
So last week I flipped the book long NASDAQ and S&P puts. You like that trade or no?
I think it makes sense. One of the charts I don't know if he has in my send over, where I think you kind of have some you've been talking about, I've been talking about as well, that we've seen breadth start to kind of roll over. It hasn't gone overly bearish. It's not we're seeing a ton of new lows.
Which chart? The stocks gap down, stocks gap up, or the
no? If you want to take like the moving average one, I know that's one you look at a lot.
The moving average one, the average of primary risk appetite ratios.
No. There's one that's I forget what they're all titled. There's one that's look at different moving averages, or you look at the POSC one would be a good. But we've seen the breadth, the moving averages, the percent above moving averages started to kind of roll over a little bit. But we're also seeing what I think is interesting, and I don't know if I've seen a lot of people talking about it, is breadth peaked in December, but now we're starting to see a little bit less support. That's okay. We can see the market recover from that. But now we're seeing the proverbial rubber band start to get stretched as well. We're now roughly about 12% above the 200-day moving average. That's typically when we start seeing some exhaustion in equities. That's what we saw last summer, 12% pullback. That's what we saw in 2018, 10% pullback. The only times those really got ignored when we were coming out of major bear markets, COVID crash in 2018. Every other time we've gotten this rubber band, this stretch, 12%, we've seen the market start to pull back a little bit. It doesn't mean it has to be a 20% crash, but we've typically seen 3.5 to about 10, 12% correction. That's healthy. That's normal. But I think we could
Especially
see something
after,
like that.
dude, we just got a 6,000 point rally in the Dow, 20% in 3 months. By the way, during the best 3-month period of the year, November through January, probably not a coincidence, that period is now over. We are now in a period that historically stocks do not do well.
Yeah. Historically, we see a lot of market bottoms in mid-March. So you could easily set up for something like that. See a 10% pullback, maybe back to the 50-200 day. But I think a 10% decline would not be the biggest shock. It would match what history has told us before.
Yeah, a nice little rug pull would be fantastic. So we're getting some questions in the chat about your thoughts on the zero DTE and its impact on the volatility index. I'd love to hear your thoughts.
I love your face. I love your face to that question, Andrew, because I'm tired of it too. I wouldn't have brought this up.
I want to know what you think. If there's nothing there, there's nothing there.
So I think it does have an impact. You're seeing a little bit more muted volatility. So I think does it make VIX irrelevant? No. I still think that if you were to see something happen, you're not going to only see it be expressed in zero DTE. Yeah, I think it's taken some of the flow out of the options that do go into the calculation for the VIX. Zero DTE obviously is not part of that, but I don't think it's purely hamstrung the VIX either. So
because the VIX calculation uses the front month contracts,
right? So it's not using 9-day. It's not using anything So it's only looking at 1 month. 130-day out. So
and then when does
zero
it roll?
DTE stuff isn't
roll?
going to that calculation.
When does it roll? Like the day after expiration? Like when does the VIX calculations, like, okay, so the front month right now we're looking at February calls and puts?
Yeah, so, right? Expiration. So expiration is always typically it's before equity expiration.
So when do they start factoring in the March?
I don't know the exact date. I haven't looked at the option calendar.
Got it.
It's before OPEX for equities.
Got it. So it's obviously, maybe not obviously, to me, and I think you and I both agree, the zero DTE options market does not make the VIX irrelevant, right? The VIX is just as relevant, I would argue. How do you think it has impacted markets? How do you even use that information, or do you just not use it at all?
I personally don't, because I can't track it. I don't have the ability to track a lot of zero DTE option data. Where I think it matters is for the dealers trying to hedge a lot of that flow. That's going to impact where their books look at. So if they get a lot of orders, and they have to be able to hedge a lot of their exposure that they're taking on because people are buying a lot of zero DTE calls or puts or what have you. The way that they're then kind of exacerbating that through their hedging of their books, that can be a factor. And so if you do see a big market move and they have to then unload something, but I don't think it's getting to be a big part of the options market. So I don't think it's something that can be entirely ignored or to say it's irrelevant. But I don't have the data to be able to track it on my software to see how much flows every day or get real granular with it. So it's something that I'm paying a lot of attention to. I still think VIX is relevant. I still think there's a lot of volume going into S&P options and futures, and that I think those still are big markets.
We've been looking at it. I know Sean, since the beginning, has been trying to figure it out and see what's there and what we can get. We got nothing. Yeah. Nothing like that. We could be like, wow, this is great data. We got to follow this and this and that. Like, there's just nothing there. I mean, maybe we'll discover it eventually. To your point, it's getting bigger. It's the options market. It's not getting smaller, right? It's only going to get bigger. So with that, we'll get more information. There'll be better data sets. Like eventually, I think that maybe there'll be information there that we can use. And if not, that's okay too, right?
Yeah, I'm with you.
What about the VIX of the VIX, right? So volatility on volatility, right? Talk to me a little bit about what you're seeing there.
Yeah, so I look at that from kind of looking at when they start to diverge. Oftentimes you'll start seeing VVIX move before the VIX. where it will you start seeing more interest in maybe VIX options, which is going to move the VVIX. But again, VIX bottomed in December. So it's not like we're making new lows in the VIX and the VVIX is continuing to rise. So I look for divergences there, not seeing a ton of that right now. We kind of were a little bit at the end of last year. VIX was being a little bit stronger into that low in the VIX. But yeah, I look for divergences there at the top. If VVIX isn't making higher highs along with the VIX, that can be some exhaustion and volatility. But similar to kind of equities, looking for divergences between S&P and VIX, or when they start to correlate, which they did at the end of last year. Yeah, that's how I look at it.
What about this IPO chart? This is a great chart. Throw that IPO chart up there, slide 2. So this is the IPO Index.
Yeah.
Overlaid with the S&P, and then down below the IPO Index relative to the S&P. For those people who are unaware, the IPO Index, Coinbase is almost 10%. Kenvue, KVUE is almost 10%. Roblox, NU Holdings, Rivian is still in there. Affirm, UPath, Robinhood is still in there. These are the largest components. And then just quickly, Thrasher, 36% tech in the IPO Index, 22% financials, 16% discretionary, no energy, no utilities, no healthcare, no basic materials, no real estate.
Yeah, so the way I view this is just if you're very bullish on the equity market traditionally, and you're looking for it to express it from a higher beta standpoint, you're going to look at some recent IPO names. Traditionally, IPO stocks being higher beta do outperform in uptrends. We can see that on the bottom panel there. In 2013, you saw the line steadily rose higher because IPOs were outperforming S&P. So when they begin to diverge, when people start selling, we start seeing IPO stocks underperform on both an absolute basis and relative, which we can see on this chart, then I think that can tell us, okay, maybe the market's de-risking and no longer showing this extreme interest in these more volatile IPO stocks. And that can be kind of a barometer into risk appetite. So as we're seeing IPOs starting to underperform, it peaked again last December, both relative and absolute, and started to decline as those IPO stocks started to sell off. Meanwhile, it was just kind of those 4 or 5 names that's pushed the S&P higher. None of those are recent IPOs, so it's not participating in the IPO index. So this is kind of one way to evaluate risk appetite.
Strazza, I thought that they rolled these names off after 6 months. Did they
No,
change
much
the
better
rules?
than that.
No, they put them on.
Yeah.
They put them on after 6 months.
Oh.
They can stay in there for a while.
Yeah, I mean, some of these, like you were just naming 3-4 years
Right.
now.
That's what I'm saying. Got it. So they put them on 6 months after the IPO. Got it. I was totally, and they're off.
Because they don't want that big mess. A lot of times you get the sell off, initially on the IPO. So I think they want
Lockout periods and all that.
So the IPO index doesn't have any IPOs. Got it.
This is just a speculative growth, right? High beta offensive index. You could substitute ARK or small cap growth or something like that, and it should be the same picture.
Yeah, the reason I'm not a big fan of ARK is because I feel like she screws around with her portfolio too much.
A lot, right?
Yeah, so that's why I really don't like to track ARK, because it's what it looks like today is not what it looked like 6 months ago, and it's a moving target.
Right. 100%. And but for the record, she's welcome to do that, right?
It's just, that's right. But she's not an index. I don't want to.
She's not an index, right? Exactly. No, that's fair point. Like we track it, we look at it, but to your point, there's been not really much to discuss or look at lately anyway, so it doesn't even matter.
When one of her 22-year-old interns has her buy 6 billion shares of something, it looks different now.
Yeah, is that how old their intern is?
They're all. That's the reason. That's part of the reason why I think it crashed so bad, because all the people that she had working for were super young, super yes men and women, and she just hired because they had their bios and they were all like recent college grads, and they were like the senior analyst for pharmaceuticals, and they were like a pharmacy student 6 months before.
Hilarious.
Dreamers. Listen, go back to that chart real quick.
Strasser makes a good point, like not surrounding yourself by yes men. Like I surround myself with ball busters. I mean, between like Sean and Strazza, like they don't let me get away with anything. But that's a good thing, right?
Yeah. Just watch the show these last few days. With something like this, okay, I think back to last year. The market, the major averages at least, ripping all year. This chart was just sideways. All it did was stop falling, this relative trend, right? So maybe it's still sideways. You come on here talking about the Mag 7 is really doing, most of the work here. We still haven't seen that breadth expand down the cap scale and out on the risk spectrum the way we wanted to. We started moving in that direction, made some progress in Q4, gave a lot of it back since then. until those stocks, really pick it up, we see that breadth expansion. This thing probably remains a mess, this relative trend now.
Yeah, and I think because it is kind of concentrated, as JC was mentioning, of who kind of the top names are, this is going to be very volatile to like a Coinbase. So when they get SEC letters, it's going to impact IPO, the ETF.
Yeah.
So yeah, it's going to have the individual stock risk because it is a little bit higher weighted towards certain names.
There've been a couple of comments here about your shirt, Andrew. You want to talk about it?
Noble. It's a what do we call it? I do CrossFit. Noble is a big. They used to sponsor CrossFit. I just got back from the gym like 10 minutes ago.
It's not Tom Brady's shirt?
Yeah, they just merged with Tom Brady's supplement brands. Yeah.
Got it.
How come, you know how like in Fight Club, rule number 1 of Fight Club is to not talk about it? How come in CrossFit, that's all, they love talking about it? Why is that?
It's not Fight Club.
I know what you mean. Like, how do you know someone does CrossFit? Because they tell you in the first 5 seconds. It's fun. You should try it.
Dude, I'm gonna hurt myself, bro. I've seen some of the shit
You're
you guys are doing.
No.
No. I do legs with Maggie across the street. She's a beast.
Go to your jumping jacks.
She's a beast. Nah, man. We're doing deadlifts and squats, but
what do you deadlift? We talked about bench press last time I was here, so we might talk about something lifting this time.
315?
Yeah.
Is that good?
Yeah, I mean, everything's relative. If it's good for you, it's good for you. It doesn't matter if it's.
I'm like 6'1", so is it harder for me because I'm taller?
It's more probably based off your weight. Like heavier people can deadlift more, but
I have a big ass, right? Because I'm Cuban.
Yeah, you're too large. You're too large. He doesn't have the agility. He doesn't have the agility.
I never did.
I deadlift 405. I weigh 157.
You're deadlifting 405?
Yeah, I deadlifted. Yeah.
Oh shit, dude! Good for you, bro. Thrasher's like
crazy.
crushing
You're
me on my deadlifts. You're like embarrassing me. What do you bet? But you know how like for bench people with long arms, it's harder. Like basketball players can't bench, but like offensive linemen can bench like a zillion pounds because they have like little dinosaur arms.
Bench 255.
255. All right, I got you beat on that one. Thank God, I got you beat on something.
What do you bench?
About 260. A little bit.
I could throw down 5 pounds on there if we needed to.
Oh, see, I can't. That's as much as I can go.
Can you also do handstand push-ups? And can you?
No.
Yeah.
No.
That's what CrossFit's about. I can do gymnastics. I can run, lift stuff. It's all like being a well-rounded athlete.
It's all very impressive. Very impressive. I think to quote the great Kenny Powers, I think he once said, "Yeah. I play real sports. I'm not trying to exercise a lot, right? I don't want to be." I play real sports. I'm not trying to be really good at exercising.
So I'm not trying to be the best at exercising.
Dude, I got to go back and watch more Kenny Powers stuff, dude. He was so good. So good. Thrasher, before we let you run, what's the trade? Give us a trade. What are you putting on this week?
Right now, I have a bearish slant. So now I'm looking for confirmation of that. So I'm looking for having to see where we opened this morning.
Dow's only down 200. Small caps are only down 1.25%.
Yeah. So I think if we fall, I'm kind of looking, if the 20-day moving average has been kind of short-term support, watching that on the S&P, if we're continuing to see kind of de-risking, I'm not leaning short at this point, but I'm not looking to really take a lot more broad market exposure. So I'm looking at individual stocks. I had a couple stocks last week. So looking more individual names, being more surgical. And if we do start seeing confirmation the indexes, maybe decrease overall market exposure. But not
in your portfolios, you're not just ETFs in your portfolios, you're individual equities too, right?
Both. Yeah.
That's cool.
What kind of names?
I can't go into names.
Very hush hush. Thrash.
Compliance. I can't give names.
No big deal. All right, Andrew, I appreciate it, bro. I will. I'll see you soon. Let me know when you're coming to New York. Come to New York.
Yeah. Hey, are you guys at all going to ETF conference next weekend in Miami?
No. The hell are we doing there?
I love Miami.
ETF exchange at the Fontainebleau. How do you say it?
Is that like Comic-Con for like financial advisor nerds?
Last time I was at Fontainebleau, there was a CFA thing going on, and I was having the best conversation.
They rented out like the Live nightclub for the Super Bowl.
Yeah.
That'd be cool.
Okay.
Anyway,
half those people there have never been to a nightclub.
Probably. Yeah. But I'll be down in Miami for the ETF conference next week. Didn't know if you guys are gonna be there or not.
They hung Udonis Haslam's jersey on the rafters of Live.
I don't even know who that is.
When you're at the club, in between whatever cosmopolitans you're drinking, look off and check out Udonis Haslam up on the rafters.
This is like a Miami thing.
Well, he grew up. He went to Miami High. He went to University of Florida. Then he played for the Miami Heat for 20 years. Won 3 championships. So he's like Mr. 305. You know.
Gotcha.
He's the
All
man.
right, I'll look
He's
for
the
it.
man.
All right, thanks for having me on, guys.
All right, Andrew. Good times. Come back.
Bye.
Later.
Thrasher, always good perspective. You know, looks at the market through a different lens. Looks at the market through like the same lens as us and a different lens. You know.
I'll go to this conference.
Go. I don't care. I mean, the ETF conference.
The spa at the Fontainebleau. Excellent. Really good. Really good stuff.
All right.
Yep.
The rain shower there.
What's the
Check that
Italian joint that's there? It's not Il Gabbiano. It's what's the Italian joint that's in there?
At Fontainebleau, they got a couple of restaurants. None of them
There's
are
an
really
Italian
that great.
joint there.
The
That's pretty
Chinese.
The sushi place is good.
Downstairs?
The sushi place is good.
The sushi place. Yeah, it's not
yeah.
bad. It's like a little hole in
It's
the wall.
okay.
Wow, Victor
The Chinese-
shouting out Dombala Belen last night. Wow.
They have a Chinese restaurant upstairs, which is like Zagat rated. That's the big one, and it's pretty excellent, but it's pricey. They do like the crispy duck with caviar, uni, and all types of.
Sounds like a
toppings
bull
on it.
market
It's
dinner if
pretty-
I've ever heard of one.
It's a bull market dinner. It's a bull market hotel.
Fontainebleau. I mean, dude, there's so much history in that hotel.
It's cool. It can be chaotic. It's fun. You should go check it out. But Nobu right next door is probably better in like every way.
I love Nobu. I don't care what city or country I'm in. Nobu is.
And that's where you get the sushi. They have a great sushi restaurant.
Look at
Nobu.
Strazza.
So
Look
if
at
you're
Strazza.
staying at
Strazza thinks like this. It's like this earth-shattering revelation that Nobu has good sushi. It's like there's this
Well, no, the
restaurant. You
famous one. I
guys should
get it.
try it. It's this Nobu place. It's very good.
What was the hotel called before they like rebranded with the Nobu? It was something else.
I don't know.
It's still there, but it's like whatever.
The owners of Nobu have a Chinese restaurant, and there's one in Mumbai, and it's the same guys. And it's the same vibe, except it's Chinese food instead of sushi, instead of Japanese. Freaking awesome, dude. I think they have one in London too, but I've only been in the one in Mumbai. It's really good. It's the same owners.
I've only been to the one in Miami.
There's
All right,
one in San Diego. They're all over the place.
Let me read off a couple headlines, and then we'll bring on Mr. Ian Cully.
Oh, nice.
So Boeing in the news again because it's a Monday. So what's the day that ends in Y? So Boeing is in the news. They have to rework 50 737 MAX jets. Their supplier, Spirit Aerosystems, ticker SPR, is the one that supplied these jets, and Boeing discovered misdrilled holes on the on the fuselages of 50 jets.
You had one
So
job.
they're gonna have to.
One job.
Well, it's a complicated job, but yes, you have one job, and that is to
Put the goddamn
if you're a supplier
screws in the plane.
yeah, basically. So Boeing was down pre-market. Don't know what it's doing now. Novo, NVL making an acquisition. They're buying Catalent CTLT. This is going to help them increase their production of Wegovy, however you pronounce that. So nice premium. What was $63.50 per share in CTLT? Values the company at $16.5 billion. Marathon, announced their Bitcoin mining updates for January. So they do that every month. Not new news there. They ended the month with 15,701 Bitcoin. So there's that. And that's pretty much it for headlines. Kind of a light headline morning today. So that's what I got.
Listen,
anything of interest there?
With Boeing, you could say they have like a complicated job or whatever. Airbus doesn't have these problems. You don't see Airbus in the news with these disasters.
Yes, you are
When
correct.
Every
does
other
Tesla get in the airplane business?
Too much, dude. They don't want to be in it.
I'm asking. I don't know anything about any of this
Who
stuff,
wants
but it
that?
just seems like these automakers
No.
suck, and Tesla's eating
No.
their right. And then say, why not the planes? No.
No.
I'll tell you why. Because there is no way they can run a plane with a battery. That technology
Not
does
yet.
not exist.
Not
right?
yet.
So
No freaking way.
Well, Tesla doesn't do things with fuel, right? That's their whole thing. So that like maybe they'll make you like some crazy moped or hoverboard thing with a battery.
They probably already have
but
them.
planes ain't happening anytime
so it's
soon.
a battery
You
thing.
need
It's
the
a
real
battery thing.
stuff
Yeah.
to power a
All
plane.
right. What if we get like, what if we can like pocket nuclear, right? Then that'll work.
Pocket nuclear. Listen, I'm very excited about these mini helicopters, as we've talked about many
Mini
times.
helicopters.
Maybe that's
Oh,
the mini
how is our Joby Aviation doing?
Joby.
How's that? I haven't looked at that one for a minute.
Back in the box. Looks like a lot of these specky
ouch.
growth stocks,
Yeah.
right? Got the breakout and then
Fun while it lasted last summer. All right. Should we bring on Mr. Ian Cully? I think we should.
Please. Yeah.
All right.
We should.
Ian, you ready? I hope so. Coming on.
Yeah.
Hey now.
They had
Mr.
one
Cully.
job. Just put the bolts in the plane, right?
One job, bro. One job. Put the damn bolts on the door, bro. Come on. What are they even doing? They need some of Kathy Wood's interns. You know what I'm saying?
Just screw the screwdriver. Just turn
Ian,
the
what'd you
screwdriver.
think of and here we are talking about futures. What about what Thrasher was saying about the commercials and the VIX futures?
I thought it was really interesting. He made a really good point about tracking the COT positioning in the equity index futures. How it's not as reliable.
Yep.
I gotta start following the VIX much more closely. That's something I don't think we have that in our COT table.
It's in there. It's in there.
It is.
It just never comes up because, like, I mean, how much action are you going to see in VIX futures? And we're really focused on like, dramatic positioning.
Yeah.
More so than like he looks at it every single day. He writes like freaking white papers about it. You know what I mean? Like,
yeah, he wins awards.
He wins awards.
Guys, volatility didn't spike. It's not spiking, right? Like, isn't
Not
that
yet.
the descriptor? It's a
yet.
cow fart in the wind. This move.
It's a who?
A cow fart in the wind.
VIX.
Yeah.
How mad would you get if I told you that the VIX is up almost 30% off the lows?
Dude, it's the VIX. Like, look at the chart. Come on. Nothing perfect.
I look at it.
That's not a spike.
Nobody says it was. I said not a spike yet.
Dollar peso's catching higher.
Dollar peso's catching higher. You know what that means for the old volatility index, Strazza? Why don't you tell them? What does that mean for volatility?
Listen, PK here. COT only comes out once per week. Why don't you correct me? And if we're lucky, it comes out once a week.
Yeah.
Right.
CFTC.
Right.
What a disaster.
It's not a holiday. Any point during the week pushes them back.
Is this a government? Is this the CFTC? Their government, right?
Yeah, absolutely.
That's probably the problem.
Yeah.
Like if it was like private, it'd probably be a lot better, right?
All the private data is better. The data that comes from the private companies, it's kind of sad.
Why is it government? Because this is like so important. It's like more regulatory stuff.
This is just a government agency. It's a regulator. This is the sister organization to the SEC.
Like when FINRA comes out with their like margin data and stuff like that, right?
Also government, but at least with FINRA, most of the stuff that they're putting out, they're not coming up with it themselves. It's reported to them in filings by public companies who are good about it, and then they're aggregating and disseminating the information. And even that takes them too long.
100%.
Listen,
what's on your mind, Ian? Talk to me. So over the weekend, you're looking at charts, right? Big conference call tonight, getting ready for it, all fired up. What's going on in that Mohawk mind of yours there?
I think the big reversals on Friday, especially in the dollar and currency markets, that really has my attention. DXY breaking above this 104.38 level this morning, the last 30 minutes. Taking out those pivot highs from last fall. Dollar index, ripping above that level, heading back up towards 105, 106. That fits with this seasonal weakness that we see here in February for equities. We're seeing commodities come under pressure. The only pockets of strength in the commodity space are the softs and cattle. I'm monitoring lean hogs for a breakout. I'm not watching gold for a breakout right now. I'm not watching crude oil for, new highs. I'm not tracking copper for a breakout either. So yeah, I think this next month, these next 6 weeks, it's kind of sit back, see how things settle. And from a trading perspective, I like buying the dollar. I like shorting the pound. I like shorting the euro, shorting the Kiwi, shorting the Aussie. I mean, that's kind of what's on my mind at this point.
What about like an Aussie yen? Are you overthinking that, or is it just the yen is sort of distorting that?
Yeah, I think the yen's distorting that. I've stayed away from the Aussie yen for a while now because it looks a lot like the 30-year yield, and shelf of former highs. Maybe it goes. We'll have to wait and see. But yeah, I'm not trying to overthink the Aussie yen right now.
What about that euro breaking down to levels not seen since before Thanksgiving?
Pound to.
Yeah.
Is that usually something that you see happening when it's a good time to be owning stocks, or is that something that is a good time to be shorting stocks when you see those sort of breakdowns in the euro and the British pound? In your experience, Ian?
Usually the latter for sure. But again, we're talking about lows not seen since Thanksgiving. So this is a tactical, intermediate view here. So I don't want to get ahead of myself over the next, like I said, 4 to 6 weeks. I kind of want to see how things play out. See if the euro can dig in around 105. But if it slices through on 105 and it's heading back down to 103.50, that's a big level for the euro. And you gotta imagine that if it's a top component of the U.S. dollar index is revisiting, a decade long support level, then equities are probably struggling.
Yeah, I hope so.
Yeah.
What about some non-correlated opportunities? One of the things I really love, I was talking to Chris Kane about it on Friday, is really, strategies that have little to no correlation with other things we're doing, like my stock portfolio, long only portfolio, and my real estate is going to move together.
Right.
Pretty much. There's nothing I can do about that. Right. It's what we do with the other strategies that we can do something about that to try to eliminate that correlation. One of the things I love about the commodities market is that those opportunities arise quite often, in fact. Any thoughts on any of those opportunities out there?
Yeah, exactly. That gets back to live cattle, lean hogs, some of these soft contracts, cocoa, cotton, potentially coffee here soon. They don't tend to react to these big moves in interest rates or the dollar. And we saw it on Friday. Dollar flips the script, gold comes under pressure, just metals in general come under pressure, crude oils catching lower, and then you got lean hogs in the green. You got cattle, live cattle.
I was going to say
in the green, and it's like, they don't care.
What does that say about rates? Live cattle and 30-year futures, 30-year yields.
Right. And that's the thing. The underlying trend for rates remains higher. Right. Should we get a pullback? I don't know if we should get a pullback or not, but I think a pullback in rates is logical. Right.
Didn't we just get one?
We did. We absolutely did. So now the question is, will it continue? Will rates continue to fall in the next 6 months or a year? Right. Near term, they're not. Near term, they're digging in. They're catching higher. I think that, let's call it 4.25.
What did this Powell guy say? What did the Powell guy say on 60 Minutes last night? Seems like the market wasn't thrilled about it.
Well, I think he's playing it. He's playing it safe.
Spencer, it seems like this is something you would watch. Did you watch that?
I'm going to watch it.
Well, I watched it. I watched it this morning. I didn't watch it
And was
live.
it was
I
it
watched it this
riveting?
morning. Actually, no, it was really not. He unsurprisingly he repeats himself quite a lot. He has to do that, right? So if you, I mean, we just had a meeting last week, right? He kind of just repeated himself.
Nobody wants to listen to the poor guy.
And what about
Basically.
and what about the guy interviewing him? Did he do a good job, or did he just throw softballs?
No, they weren't softballs. You know, it was a 13-minute segment. That doesn't really feel like, that's not like long enough to like really get into, you know, the meat of anything, right? Because there's so much to talk about between the policy and inflation and, you know, the job market, and then there was some fiscal stuff in there. So like, and then there was, he had to ask questions about politics. So like, there's a lot to cover.
It's a tough
like
interview to give, right? Because half of the things you just mentioned, he probably punted on or can't opine on, or won't.
more or
Politics,
less.
this,
Like,
that.
How much editing you think
yeah.
was done on that? Were there a lot of deleting?
No, look, he asked, the question was simple. Do you factor in politics? And the answer was no. More in more words than that, right?
I have a question.
But-
So my understanding is that Obama is the one who brought this Powell guy in, and then Trump kept him, right? And then
Yes. Yeah.
and then the Biden guy kept him too. So like, there's no
Yes.
Democrat
That's
Republican situation going here. They all think this is the guy.
There really
he
shouldn't
joined.
be.
Yes.
Mhm.
Yeah.
Traditionally,
He joined the Fed during Obama's
it's
term.
very important
Trump-
that the Fed maintains their independence more than any other government agency. So
And even like extreme Republicans and extreme Democrats, they'll even admit that. They'll even like,
yeah, but I mean,
I
they
don't
try. They try. There's definitely pandering, but the Fed, particularly under Powell, I think maybe things were a little different under Yellen. But Powell, from what I can see, has been very objective. When Biden came in, he tried to tell the Fed that one of their new mandates was ESG, right, and environmental stuff. And the Fed kind of pushed back on that, and Powell will come up there and say, we have a dual mandate, right, and kind of remind people. But the presidents will push and try. And I would imagine
what's the dual mandate? Market stability and maintain
price
inflation.
stability and employment.
Price stability.
Price stability and employment.
Employment
and-
specifically.
Two things. That's it. Everything
Well,
else.
not like the economy, specifically employment. But what about inflation? Don't they have to fight
That is the
inflation?
economy, right? If
Oh, I
those
see
two
what
things
you're
are stable, then that flows through. You have
So-
a good economy.
So it's not stock market stability?
No, well, that's a part of price stability,
Yeah.
right? That falls under that.
I'm asking.
Yeah, it falls under price stability. They don't want a ripping market. They don't want a crashing market. You know, they want a steadily rising market.
All right.
Yeah, I think he's done a great job.
Yeah.
I love Powell.
Anyway, you don't have to watch it. Even you, Steve. There really was nothing new covered, so I wouldn't. You know, whatever.
Oh,
if you want to watch it,
I
fine.
was
But
gonna say, I would imagine this year, you're already kind of hearing it. You're going to get a big push from one side of the aisle for rate cuts, right? Democrats are going to want as many cuts as they can get this year. Try to juice this market. Take care of Biden in November. That always.
I mean, he said, you know, middle of the year, but that's what the market says too. So that's not a surprise.
Well, the market had March, and he
you know.
just kind of like swatted that really nicely last week.
Yeah.
And that was that little volatility following the Fed.
Yeah.
All right.
All right.
Shall we?
Cool.
Recess.
Yeah. Ian, wait. Ian brought more charts. Ian, do we have? Do you want to share anything?
No, man.
No?
I think we covered it.
Talk about it tonight.
All right.
Yeah.
Cool. All right.
Powell, it's not up to Powell.
Okay.
So Wavy, Powell has done a good job. LOL, look outside the window. We are damn near a civil war. Go back, rewind to what I just said.
Civil war?
Mandate.
Go for
That's
a walk.
not his job.
Go for a walk.
He shouldn't even care about anything. I don't know what you're talking about.
Yeah.
But if I did,
Go for
and
a walk,
Powell
buddy.
did, wouldn't care about it.
Yeah. Can we throw up slide 2 here? I just want to talk about my oxtails. Very excited.
6 ounce?
Oh,
Dude, look at that. It's a
Sweet,
little too
dude.
fatty for me. I'm going to cut off some of that fat. It's a little too much for me.
Wow.
But here's the move, right? So for many years, not many years, for a few years, I would make the oxtails, and the broth itself used to be so spicy, like undrinkable, but then the meat wasn't spicy enough, right? That was my problem. So my goal was to make the meat spicy and then the broth less spicy, right?
Oh,
So
yeah.
the move is that I marinate the oxtails for 3 days in cayenne pepper and the Asian one. What's it called? What's the Asian red sauce?
Szechuan?
no.
Sriracha?
Oh, sriracha.
Nope. What is it called?
Is it the Korean one?
No, what is this gonna kill me now?
Sriracha, dude.
I'll get it for you for tomorrow.
Sambal?
It's like the garlic chili. It's like
Sambal?
Football.
Oh, garlic chili sauce? Chili sauce. Yeah.
no, it's got a name. I'll get you the name. Sorry, guys.
That's-
Oh yeah,
that's a-
I think
sambal.
it's sambal. Yeah.
Sambal. Yeah. That's it. So anyway, and the cayenne pepper, and I let it sit there for 3 days, right? And then I sear it, right? Before I throw it in the slow cooker, I sear it. That's it. Samba Olek. That's it. One hole's got it. Samba Olek. That's it. And sear it, right? Really get those juices in there, and then you slow cook the hell out of it. Put it in overnight. I'm gonna put it on Saturday night so that it's ready for the Super Bowl.
Wow.
They look
Yeah.
great, man.
And the girls don't eat it.
Oh, even
I
better.
don't know why.
Even-
So it's just me and a couple buddies of mine. They're just gonna crush these things.
all right,
I got
send
called out at the butcher. The butcher lady, she's like, hey, these are a lot of oxtails. What do you need so many oxtails for? I was like, am I really getting called out right now? Anyway, that's what I got.
Good for you. I'm jealous. Looks fantastic.
Um,
I like my Sunday night shows. So yesterday, I was very, very thrilled due to the return of one of my favorite shows ever. I don't know how he's still doing it. It's still hilarious. Larry David, Curb Your Enthusiasm. It's just so good. I'm glad it's back.
I didn't know it was back. There's new
I
episodes.
didn't know it was back either. We have kids, Ian, so we're a little out of the loop. Strazza's got all the time in the world to sit there watching his TV shows.
I know. I don't really. Yeah, I don't get to watch TV.
Me and Ian are like, who knew?
I want as much TV as I want.
Steve, do you want me to show you this? Do you want me to show this video that you took this morning? I'm not
Yeah,
sure.
I mean, listen, this has never happened before in Key West. You could try it, Spencer. But the hailstorm here this morning was so intense. Check this out.
Yeah, is it
like-
playing? Holy
Weird,
shit.
right?
So that's a dirty porch. That's a legit hailstorm. I grew up in Connecticut. They're very rare. Never thought I would see one down here in the Florida Keys. So strange weather continues.
I don't know. My recess is welcome to New Jersey, everyone, because New Jersey is the host of the World Cup final.
I'm
Yeah,
going, dude. I'm
very
totally
exciting.
going. 100% I'm going.
Really?
That's fantastic. I think it's the right move. The Meadowlands, one of the greatest places
that's
in the
bullshit.
country.
No.
Yeah, absolutely.
It should be in
Giant stadium.
Miami. No. It should be in Miami. I'm glad it's here so that I can go. So selfishly, I'm happy about it, but that is bullshit. It should be in Miami.
So they announced the schedule. This is for the World Cup in 2026. One thing I did not appreciate before is because there's so many sites, each site only gets a handful of games. So there's only seven games in New Jersey. There's like 6 in Philadelphia. Dallas has a lot. Dallas has like 9, but anyway, it's so spread out. So there's really not that many games at each site. I would try to get to one of those 7 games in the Meadowlands.
I'm definitely going. I want to go to like a random one, maybe like a USA one, and I want to go to, and then I'm going to go to the championship. I already made a call yesterday. I'm on the waiting list.
Wow.
Nice.
Yep. Like if you
All right.
if you have an Amex, the Centurion Club, they'll get you on the waiting list.
All right. Didn't know.
If I could just address some of this insurance stuff. Ian, you see all this in the papers? How Florida people can't attain insurance, and it's such a nightmare.
I've seen that. Yeah.
It's not a thing. I don't know if it's a thing for you. I live in probably the worst area in Florida that should be the toughest to insure. It's not a problem. Me, nobody I talk to, I see these articles, I keep reading them. I don't know where this reporting is coming from or who can't attain insurance in Florida. Car insurance, not a problem. Wind, flood, none of it's a problem. So I don't know.
I mean, you can still get it. It's just really expensive, especially if you live out on the beach, because we have a barrier island here, and whenever a storm comes through, I mean, it takes out,
Yeah.
it takes everything out. So, which is about every 10 to 15 years. But no, you can get insurance. I don't know.
It's gone up moderately in the 10 years I've been here. Like I would have assumed more. Like I know where I live. I knew what I was coming into. I don't know. I think all of these kind of articles are kind of overblown on this issue.
Right. Exactly.
All right. It is Monday. We got the Flow Show with Strazza and Sean, and it'll come up at 11:30 a.m. Eastern Time. So stay tuned for that right here on Stock Market TV. Thanks to our guest today, Andrew Thrasher. That's right. Thanks to Andrew Thrasher. Thanks to Ian Cully. Thanks to all of you for hanging out. We'll see you later. Go make some money. I'm going to do a hard reboot.
Short your
of my
stocks
computer.
responsibly, folks. Short it
Don't do it.
responsibly.
I love Mondays. Happy Monday, everybody.
Run it. I can't take no loss. I don't even know what it costs.